All right, good afternoon, guys. How are we doing today? If I can get an audio video check, let me know I'm coming through loud and clear, that you can hear me and see my screen here. That'd be great. Just let me know we're coming through. Thank you, Jackie. I appreciate that. All right, well, I hope everybody's had a great trading week and some great, good trading day. We had some good movement in the markets today. And thank you, Robert. I want to talk to you a little bit about today. Our subject is premium collection with binary options. And, for some of you, this might be a very familiar subject. Some of you that are veterans, been around for a while, you might be familiar with premium collection trades. Some of you that are brand new to Nadex might not be as familiar with what that is or what that means. And so we're going to do a short webinar today. We're not going to dig in crazy to a million different strategies and systems. I want to wrap your head around the concept of premium collection, what it is and how it works, then give you a few examples, and we'll even see if we can look at some examples from, even some today's charts, and just see where there might have been some areas that, could have taken advantage of that, and just start opening your eyes to those options, okay? And let you start demo testing that and playing with that. My name is John Skelton. I'm with apexinvesting.com, and this webinar today is brought to you by and hosted by Nadex, so we appreciate them having us here and appreciate you being on with us. Let's get our disclosures knocked out. As always, trading futures, options, or any financial instrument involves risk, may not be suitable for every investor. Also, guys, keep in mind if, in today's webinar or any webinar, if I'm showing you the Nadex platform, first of all, I'm showing you the Nadex demo platform. But if you see me enter or exit any orders, that's not trading advice. That's not a recommendation. That's just an example, me helping you visualize and see, visualize what it is I'm trying to show you or teach you, or just giving you an idea how to utilize the Nadex platform. So keep that in mind. And all trading decisions are your sole responsibility. If you're brand new to Nadex, okay, make sure to hop on over to nadex.com. You can get some great information here. Nadex basically offers two different products. They offer binary options and spread options. And you can get some information on both of those right here under these two tabs. And they'll go through here to get some market specs, some great market news here. Just kind of some overviews of what's happening in the market, maybe help you formulate some ideas. Trading platform, very important here. If you go right here to demo trading platform, something I have to give Nadex a lot of credit for is they do a lot for their members. They provide a lot of free education, some free tools, and a great tool that they offer here is Nadex will give you a $25,000 free demo account, okay? All you gotta do is fill out some quick information and hit open my practice account. In just a few moments, you'll get an email from Nadex with a temporary password. You'll be able to log right into the demo platform, okay? Once you log into the demo platform, go right up here to My Account, and then right here to Settings, and then to Password. And you can change that password they email you to whatever you want, something easy for you to remember, okay? But the Nadex demo platform is a great place to get familiar with Nadex, a great place to get familiar with, the binary and spread options that they have for you, the different instruments, expirations, practicing using the platform, entering and exiting orders. But also, and very important here, is to practice and master any new strategies or systems that you're testing out. Master it in demo, work out the kinks in demo, make the mistakes in demo before you go live, right? I mean, practicing and learning with your live money is a very expensive education, right? So make sure that you take advantage of that demo platform. If you don't have one, and you're brand new, sign up and get one right now. It's absolutely free, and you can start using it right away. Okay, so make sure to take advantage of that. You'll see me reference this platform, several times here. Also, real quick, back to the Nadex site here. Right here under Learning Center, another great place full of free information and free education from Nadex. All right, you've got all kind of webinars and videos and ebooks and trade examples. But if you go right here to webinars, for example, this webinar that we're on right now is being recorded. And if you go right here under On Demand, you click On Demand. All right, and you can go back and right here find me, John Skelton with Apex. If you've missed any of our past webinars, you can go back and watch the recordings here. All right, there's a ton of information in here. We kind of cycle through. We kind of start with the basics. Today I'm going to do a very just quick basic review of what in the money binaries are. We're not going to jump in deep to the basics of binaries. If anything here today is kind of over your head, or you're not, you're still kind of getting a grasp on what binaries are, you can go right here, and this is this first one, Nadex Binaries 101. This is kind of like a, hey, let me take your hand, hold your hand like a 5-year-old and walk you through it. What is a binary? How do they work? How are they valued? Okay, it's kind of a start to finish. And then we kind of build on those, choosing the right binary. Do you understand them? What are top mistakes? How to trade them at night, some different strategies, some great stuff in here. Okay, so be sure to check that out. Also right here under webinars, you can see the upcoming webinars, the date and time and subjects. Get signed up, get registered for those webinars, get reminder emails about them. Just a wealth of information there for you, okay? Again, my name is John Skelton with Apex Investing. Apex and Nadex, two complete separate companies. Nadex is an exchange. Apex, we're an online education company. We've got over 20,000 members. We've got live trade rooms and strategies and systems and all kind of free training courses. A lot of our systems focus on risk management and probability. That's why we love the captive risk products of Nadex. And we're a Nadex education partner. We do these webinars for them, but we're traders just like you. We trade Nadex binaries and spreads every day. We trade them in our trade room, and that's what we're here for, just to help you understand who and what is Nadex, how are some ways you could take advantage, of the Nadex products and use them in your day-to-day trading. I've been with Apex now for actually about 4 years as head of operations. I've got a background in the banking industry and as a licensed stockbroker, and again, a trader just like you. So that's what we're here for, and that's what's going on. So enough of that. Today, we're going to talk about premium collection with Nadex binaries. So we're going to talk a little bit about what is premium collection, how does that work, and how can you let time work in your favor. We'll talk a little bit about how to manage a premium collection trade. All right, and like I said, we're not going to be going deep into the basics of binaries today. I showed you where you can get some more information on that. But I do want to review real quick kind of the different types of binaries that are out there. Out of the money, at the money, and in the money, because it's super important that you fully understand and grasp, okay, what those are. First of all, let's talk a little bit about premium, okay? And I always like to use the insurance analogy. When you think of the word premium, what is something that each and every month you pay a premium on? Well, one of the first things you'll think of is insurance, right? Insurance on your house, insurance on your car, okay? So you pay that premium every month, okay? And it's there to give you protection, right? That's what insurance is. It's giving you an edge. It's giving you a little bit of protection, a little bit of insurance in case something happens, right? And it helps you feel a little more comfortable about it. Now, what we're going to talk about is a little bit different. It's not so much about paying premium as it is about collecting premium, okay? You can be on either side of that, right? And we're going to talk a little bit about time decay and having time work for you, not against you, okay? So let's take a quick look here. This is a screenshot of the strike ladder on the Nadex platform, okay? Each one of these, listed strikes right here on the left, each one of those is a binary contract, all right? For example, this one right here, all a binary contract is a statement, right? The statement says the US Tech 100 will expire greater than 48.64 at 10:20. Okay, this is a 20-minute binary contract. All right, so it's simply just a statement that the US Tech will expire greater than this number, or greater than this number, or this one, or this one. And so, depending on which one you choose, over here you've got an offer side, which means you can buy that contract, and here you've got a sell side, which means you can sell that contract. If you think the statement is true, you might be looking to buy the contract. If you think it's false, hey, I don't think the market will expire greater than that. I think it'll be less. Well, then you could sell, okay? We know at expiration, a binary is worth either 0 or 100, all right? Now, let's take a look here, and then I want to switch over to more of a live example. Let's just look at the buy side, the offer side. Well, if we imagine at expiration, we've got 0 here and we've got 100 here, right? Because that's what a binary can be worth, either 0 or 100. Well, in between there, we have all these different 4, 5, 7, 13, 23, 82, going all the way up to 100, right? So we've got binaries priced all at different levels, okay? So let's talk real quick, okay? Just like a quick 5-minute recap here. Where's the market at right now on this screenshot? It's at 48.61, okay? Notice right here, 48.61 is where the market is. What is this strike price right here? 48.62. So this strike price, this binary strike price, is very, very close to the current market, right? 61.8 is almost 48, 62.0, right? So when the strike price and the current indicative price are right about the same, okay? I'm not talking at expiration, I'm talking about before expiration. When it's right about the same, where is the binary priced at? I can buy it for 54 or sell it for 45. What's right in the middle here? The average of those two? Who can tell me? About 50 bucks, right? Now, does that make sense as to why? Because at expiration, it's got to be worth what? Either 0 or 100. What is right in the middle between 0 and 100? 50. So at expiration, it's 0 or 100. So before expiration, we don't know yet, right? We don't know. Okay, hey, it's right close to this. Is it going to finish just above this by 1 tick and be worth 100? Or is it going to finish just below this by 1 tick and be worth 0? It's right on the fence right now. It's kind of 50-50. And where is that priced at? Right around 50. You see that? Does that make sense? Anybody have any questions on that part right there? That's what we call an ATM, an at the money binary. Everybody understand why that's priced about that way? Let's look at some. Let's pull up the Nadex platform. Let's pull up some forex binaries. Let's say euro dollar. What do we got going here a little bit later at 3 p.m.? All right, where's this market at right now? 1741, okay? Where's this at? 1742, 1738. So right in, the market's right kind of in between these two here, right? Notice 41.8, that's almost 42, right? Where's that binary priced at? Right around 50 bucks. Does everybody see that? That's for a binary that expires here in about an hour and 45 minutes. What about a weekly binary that doesn't expire till the end of the week? Okay. 1742, that's going to be kind of right in between these two binary strikes, right? 42 is kind of between these two. You know, where's the pricing kind of in the middle here? Around 50 bucks. Okay, what about some indices? What about the Dow? What's going on with the Dow right now? Let's see here, 24,790. Okay, 24,790 is going to be right in between these two strikes here. See it? And what is the pricing kind of around these? About 50 bucks. So it doesn't matter if you've got 5 minutes, 10 minutes, or 5 days to expiration. If the current price is right close to a particular strike, that binary would be worth around, priced approximately around 50 bucks. Everybody got that? Class awake here? Can I get some feedback? Everybody clear on that? Any questions? It's extremely important you get this part, and you'll see why in a minute. Okay, thank you, Stephen. I appreciate that. Okay, so if I was to pull up a chart, let's pull up the Dow. Let me pull up one of our Apex charts of the Dow. Jack says, why pick that one? Okay, Jack, I'm not saying that, or Jackie, I'm sorry. Jackie, I'm not saying that we would pick that one for a particular trade. I just need you to understand how it works and why it's priced at 50, okay? So I'm not saying to use that one for anything particular. I need you to get the concept of why it's priced at 50. Make sense for now? You'll see it kind of come together here in just a minute, Jackie, okay? Yes, it's ATM, it's at the money. Yes, that's the point I want you to get. So if I'm looking at this chart right here of the Dow, YM, right? And we can see that right now, here's where the current market is, okay? Right? So we know a binary right here would be priced around 50 bucks because it's 50-50, right? It could go up a little bit and expire worth 100. It could go down just a little bit, expire at 0. Understood? Now let's pull up the Dow. Let's just look at live examples here. What about this one up here that's priced down at 24? Or hold on, let me look at something else here. Let's look at this one. All right, what about this one down here that's way up here that's priced at $8? Everybody see that? We talked about why things are priced at 50. Now, why would something be priced way down here at 8 bucks? Well, where's the strike price? 25,050. And what is this statement saying? That the Wall Street 30 will expire greater than 25,050, right? Okay, let's look at our chart live right now. 25,050. Where the heck is 25,050? Way up here. See that? 25,050 is way up here. Everybody see that right there? Okay. So where are we at right now? 24,780. Okay. So what are we talking about here? 25,050 minus 24,780. 270 points. The market is 270 points below that strike right now, isn't it? Does everybody see that? If I were to buy this binary, for that binary to expire worth $100, the market would have to go up 270 points. Does that make sense? If you look at the price of binaries, okay, like over here, all right, I can buy this one for 34, I can sell this one for 22. What price is kind of right in the middle? If you add them together and average that out, you know, what would it be, like 28, 29 would be the average, right? So you can look at the price model of binaries almost like a probability percentage. Does that make sense? So we understand this one, right? When the market's right here and the strike price is very close, it's priced around 50. Why? Because it's about a 50-50. It's about a 50% probability it could go one way or the other. We all get that concept, right? Okay. Well, why do you think this one way up here is priced about 7 or 8 bucks? Well, because from a pricing standpoint, the probability of this expiring in the money is not quite impossible, Jackie, right? I mean, the market could blow up, right, and move 270 points. We've seen it happen. It's possible, but is it probable? without some expectation or big news event, you know what I mean? It's probably not probable that we're expecting that to happen. It's a very low probability, therefore it's priced very low. That's what we call an out of the money binary, right? This one's at the money right now because it's right where the market is. This one's out of the money because it's so far away. Therefore, it's priced very low, right? Now, granted, yes, if I was to buy this one, okay, and I bought one of them, yeah, I'm only risking $7 and I could profit $92. I like that, right? But what's the probability of that happening? It's very low probability. Make sense? So that's what we call an out of the money binary. Jackie asks, why are there no cells over here? Jackie, because it's so far away, okay, that there's not even pricing on it for the sell side, okay? Because, you know, the market's already so far below it, you know what I mean? There's not really anything there. Just like if you come up on some of them, you'll see that sometimes there's nothing on the buy side, okay? So does everybody understand those two things? At the money or out of the money, like, and why these are priced that way. Everybody understand that because they're so far out there? I mean, because what, if I was to buy that one, what does the market have to do? The market has to go up. It has to go up a lot, 270 points, and it has to go up before the expiration of my binary. A lot of things have to happen for this one to expire in the money. Yes, exactly, Jackie. It can only go up, right? Because if I buy this binary, what am I buying? I'm buying a statement. And the statement says that it will expire above 25,050. So for it to be profitable, it has to, you know, at expiration, it has to expire above that. So yes, Jackie, it can only go up, right? It has to go up. It has to go up a lot, and it has to go up before expiration. So a lot of things have to happen, right? Does that make sense, everybody? You with me, Jackie? Yeah, it can only go up. That's my only option. And if it doesn't go up, or if it doesn't go up enough, or it doesn't go up in time before expiration, it's just worthless to me, right? Okay. So there are ways to use those out of the money binaries, but that's a different webinar. So now let's look at something else. All right, I think we've got a handle on that. Now let's look here. Okay, I want to talk to you about this binary right here. What does this statement say? That the Wall Street 30 will expire greater than 24,749. Oh, I'm so sorry, that's the wrong one. Let's look at this one. Expire greater than 24,797. Right here, okay? Where's this binary priced at? About 75 bucks. You see that? It was about 75. 74797 is the strike, right? So remember that, 797. Where is 797? Oh, I'm sorry, hold on. Yeah, 24,797. Okay, 24,800. All right, let me find, hold on. Let me give you a little bit easier example that's not moving so fast here. Forex. Let's look at euro dollar real quick here. All right, let me do that. Let me pull up a euro dollar chart real quick, because we've got a lot of movement going on the Dow, and it's hard to show you when they're moving like crazy, right? And prices keep changing like that. So give me a second. Let me just open a basic chart for you, because if you can visualize this concept and you get it, you'll be like, oh, okay. It'll just light bulb go off for you, okay, of how you could potentially take advantage of this and use it in your trading, okay? So we understand why something's priced around 50. But let's look at this. Why is this one priced around 76? If we took an average, and what did I say? The buy side and the sell side, what's right in the middle here? Between 76 and 71. It's about, let's just call it 74, right? So if, like I said, if we can look at pricing like a probability, that would give us about a 74% probability for this to expire in the money, right? Makes sense? Why? Because what does the statement say? The euro dollar will be greater than 1730 at 3 p.m. Where is it now? 1738. It's already greater than 1730, isn't it? In fact, it's 8 pips above 1730. Everybody see that? Let's find it. Here's the current market, okay? Hold on here. Current price and toolbar shortcut. So there's the market. Here's where it is. Where is 1730? Right here. So for basically $75, I can buy this binary right here. And what am I saying when I buy this binary? I'm saying that the market will be greater than this level at 3 o'clock. Everybody understand that? Did I lose anybody right there? If I buy a binary right here at this strike, I'm saying the market will be greater than this level, right? And we saw that I could buy that for about 75 bucks. Okay. Jackie, you just set me up. Jackie says, so only up? No. Follow me through here, okay? So at 3 o'clock, what has to happen? Does the market have to go up between now and 3 o'clock for me to be profitable on this binary? No. What has to happen at expiration? The market just has to be above what? What did the statement say? The euro dollar would be greater than 1730. So as long as it's greater than 1730 at expiration, then this binary that I bought for 75 will be worth how much? 100, right? And how much could I make? If I bought it for 25 or for 75 and it expires worth 100, then I make $25 in profit, correct? You follow me there, Jackie, so far? Everybody follow? If I buy it for 75, it expires worth 100, I make 25 bucks. So what has to happen for it to be worth 100 bucks? The market at 3 o'clock has to be greater than 1730. So what can happen for that to happen? The market can go up, right? And it could expire even higher up here. And it still means it expires above this level, right? What if the market just flattened out and it just didn't go anywhere? It just chopped right in here where it is all the way till 3 o'clock. Would I be profitable still at 3 o'clock? Who can tell me? Say the market did not go up, it just kind of sat right where it is here until expiration at 3 o'clock. Would the binary expire worth 0 or worth 100? Somebody tell me. Yeah, still be worth 100 at expiration. What if, so the market can go up and I can be profitable. It could sit right where it is and I can be profitable. What if the market comes down and down and down and down and down and down, and it expires right there at 17:31 at 3 o'clock? Is it still worth 100 at 3 o'clock, or is it worth 0? Still worth 100, right? Because as long as it expires above this, I'm still good. So Jackie's question set me up earlier. Remember on this chart, on the Dow, if we were to buy this one way out here with a low $8 probability, what has to happen? Can it sit right here where it is and make money? No. Can it go the opposite way and I still make money? No. Only one thing can happen. It has to go up, right? And it has to go up 270 points, right? And I have to be right within the time frame because it has to go way up there by expiration. My options are very limited here. Correct? Everybody agree? If I'm buying something way out of here, the market has to do a certain thing by a certain time and by a certain amount. I'm very limited. But what happens? It can go up. It can tweeter around right where it is. It can even come down against me. As long as it expires above that strike price, it's still worth $100 at expiration. Does everybody get that? That's what's called an in-the-money binary. Why? Because the statement's already true right now. Part of the statement, right? Because the market's already above that price. So what did I give myself there? I gave myself some room, right? I gave myself some what? We talked about it earlier. Remember, what was the word? Insurance. I gave myself an edge, right? I gave myself some room to be right. Some room to let the market go up if it wanted, chill out if it wants, even come against me a little bit. Do you see how I have a lot more options with that? Okay. And do you see how, since that binary is already, the market's already above that price, that makes it a higher probability, correct? So therefore you understand why it's priced around 75 bucks, correct? Because it's a higher probability. So what do I have to happen here? It doesn't have to go up, it didn't have to go down. I just want time to go by, right? I don't care if it goes up, I don't care if it tweeters around or if it comes down a little bit. I just want time to go by and let time work in my favor and get my $75 binary to be worth 100 bucks. Does that make sense? Everybody follow me. Any questions on that particular part there? Do you see how that gives you a lot more options? Okay. And we understand why this one would be priced closer to 100, right? We understand why it's priced at 75. Yes? That's an in-the-money binary. Now, quick recap. The market is right here right now. If we bought a binary right in here, about how much would we pay for that binary? If we bought a binary where the strike price of the binary is right at where the current market is, where would that be priced approximately? about 50, okay? So, and if we bought something way, way up here that might be priced at like 10, we know why, right? So when you visualize it like this, you can say, I understand why this one's like a 50-50 probability, right? Because the market can go up or down. We don't know yet. I understand why this is only like a 10% probability, because the market has to go one way, has to go one way far, and has to go one way in enough time. I get why that's low probability. Then you come down here and say, I get why this one's like a 75% probability, because it's already a half-true statement. Does that make sense? Especially if any of you are new to Nadex binaries. Does that help you visualize a binary a little better? And when you go over here to Nadex and you're looking at this strike ladder right here, have any of you ever opened this before if you're brand new and been like, gosh, this is so overwhelming? I mean, there's all these different ones to choose from, and then these are all the different prices I can buy and I can sell, and I don't know what to do. Now, when you look at this and you open this, what is your eye immediately going to go to? Boom, here's the strike ladder. Where is 50? All right, cool. And in your mind, you're drawing an imaginary line right here, aren't you? And you're saying, okay, cool. I found 50. That's where the market is right now. I understand that, on the buy side, anything above it is out of the money and the market has to move to go up. That's why they're being priced lower towards zero. I understand anything down here is already in the money. Okay. And you almost can visualize a chart now, can't you? Does that make sense? Where like you're drawing that line, and down here, you've got them closer to 100. Down here, they're headed towards zero. It helps you visualize and understand this price ladder a little better, doesn't it? Yeah? Is that helpful at all to anyone that's new? Where this is not as overwhelming anymore, and you understand why things are priced the way they are. So, quick question. In general, good, Stephen, I'm glad that helps. In general, if we know that right in here is about a 50-50 probability, if we know way up here is like a 10% probability, and we know down here is like a 75%, okay? In general, in the world of trading, do you want to be trading with a 10% probability, or do you prefer to trade with like a 70-75% probability in general? Well, I think we all know the answer to that, right? We all want to trade a higher probability. That makes sense, right? Okay. So, but what's the downside? Because you're like, okay, John, that was a great little, webinar. Cool, thank you. Like, that does help me. But, what you're sitting here telling me, John, is I get that this is a high probability if I were to buy this at about 75 bucks. But, John, you're telling me I'm risking about 75 bucks to only make 25 bucks. So I like the probability side, but I don't like risking 75 to make 25, right? Show of hands of how many of you are thinking that in the back of your head. Hey, great little webinar pitch here, John, but you're avoiding the fact that you're telling me to potentially risk 75 to only make 25, right? Everybody agree? We like the probability, but we don't like that risk reward, correct? Because why? Let's look. Hey, I was on that webinar with that John Skelton guy from Apex. He taught me, this cool concept. So I was trading it, and you know, I bought for 75. It expired at 100, so I made 25 bucks. And then a little while later, I did it again, and I made 25 bucks. Then I did it again a little while later, and I made 25 bucks. So that was cool. I made $75. But then the next trade I lost. So I lost $75. And then the next trade after that, I lost again, and I lost $75. Now I've got to win, you know, now I got to be profitable 3 more trades just to get back to break even. I don't like that. Well, I wouldn't like that either. Do you? No. Okay. So what is something else you hear in trading a lot, right? And different strategies and systems have different risk-reward ratios. But let's say that you had what we would call a 1-to-1 risk-reward ratio. Does anybody know what that means? 1-to-1 risk-reward ratio. For an example, what that means is, you know, I'm risking a certain amount to make a certain amount, okay? So if I'm risking 75 to only make 25, right? That's like a 3-to-1, right? But what if I could risk 25, okay, to make 25, to profit 25, right? Does that feel a lot better? What feels better to you guys? Risk 75 to make 25, or risk 25 to make 25? Yeah, of course, right? So what happens here? How many times do you have to be right? How many times do you have to be profitable to break even? If you have a 1-to-1 risk-reward ratio, if you're risking 25 to make 25, you only have to be profitable 50% of the time to break even. Correct? Everybody follow me there? Right? So if I lost 25 5 times, and then I was profitable 25 5 times, I'm break even. Everybody follow me there with those numbers? Yeah? If you're 1-to-1 ratio, you only got to be profitable half the time. Okay? So what happens though? So if you can find a 1-to-1 risk-reward ratio way to trade, okay? I mean, just the odds, right? I mean, just the numbers out there might get you close to 50-50, who knows, right? But what if you can take that to the next level and you have a really good strategy or system that gets you to a 70 or 80%, you know, profitability rate? Well, then, you know, things get a little more exciting, right? Because when you can profit $25, say 7 times, and you're profitable $175, but then you have a losing trade 30% of the time, so that means you're down $75, right? Then in the end, you're still up $100, correct? So if you could trade with a 1-to-1 ratio and have a good risk, you know, a good system at about, say, 70, 80%, whatever, well, then you start getting in the positive, right? Everybody follow me here? But also, in addition to that, the trading instrument you use, okay, so everybody with me so far on these numbers and this concept. If you could get 1-to-1 and you had a good system, from there, where do you want to put that good system into? A 10% probability, a 50% probability pricing model? Or would you, in addition to having a good 70, 80% system, also want to find a way to utilize a 70, 75% probability priced binary as well? Do you see how combining those things together can really help do what? Give yourself an edge. Do you see that? Everybody with me here? Okay. So how can we do that? Well, first of all, you have to have a system or strategy, okay? Secondly, back to our example right here, and then I'm going to wrap it up. What did I pay for this binary right here? Anybody remember? Yeah, 75 bucks. Okay, so I like that I'm using a high probability binary, right? I like that it's giving me options. The market can go up. The market can stay flat. The market could even come down. As long as it doesn't go below my strike by expiration, I'm still profitable, $25, correct? Right? But what happens if it expires below my strike? How much do I lose? Who can tell me? Right. So we love everything about this, right? Okay, cool. I've got a strategy and system that's about 70% profitability rate. Great. In addition to that, I'm getting a binary from a pricing model has about a 75% probability rate. Great. I love that. I've got some options and give myself some room. I love that. What's the one thing we don't love in that scenario? The $75 risk compared to a $25 reward, correct? Okay, so what is a way to change that? Okay, what is a way to change that? If I were to trade this binary right here, if I were to buy this one for 25 bucks, how much would I lose if it did not expire profitable? 25 bucks, right? Everybody with me? But what probability rate is this binary? Like 22, right? 22% probability from a pricing standpoint. What if I could limit my loss to about $25, but find a way to use the 75% probability binary? We'd love that, right? Hey, if I can only make 25 on this binary, can I find a way to only lose 25 on this binary, but still take advantage of this binary for the high probability? Would we like that? Would everybody like that? Yeah, right? Because we don't want to risk 75 on this binary. We only want to risk 25 in this strategy I'm teaching you. Because the most, if I'm buying it at 75, the most it could be worth is 100. So, quick question, who's paying attention? Market can go up, it expires profitable. Market can stay here, expires profitable. Market can expire right here, still expires profitable. So between now and expiration, what might be a good way to manage this trade? What do we know? If I was to buy a binary right here, right now, well, about how much would it be? I know I've asked the question 4 times, 5 times. If I was to buy a binary right here, a strike price right where the market is right now, how much? About 50 bucks, right? No, Jackie, not down here, but right here, like currently right now, if I bought a strike right here where the market currently is, how much would it be priced at? We've looked at that. When the market price and the strike price are right at the same, it's about 50 bucks. Remember? That's that 50-50. Remember? You with me? Yeah? So what happens if between now and expiration, the market comes down, 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 down. Ooh, maybe I was wrong. Down, down. And before expiration, the market hits my strike price. What is my binary going to be worth then at this point in time? Not at expiration, Jackie. I'm talking about before expiration. Because this doesn't expire till 3 o'clock, right? So if between now and 3 o'clock, it comes down and it hits my strike price, what will it be currently worth right now? Well, at that point, 50 bucks. So what might be a good trade management rule if you're trading these in the money binaries? If you're wrong and it comes all the way down to your strike price, exit the trade. Okay? How much did you lose? You bought it for 75. It comes down and hits your strike price and you exit for around 50. How much did you lose? Bought for 75, had to get out of it at 50. You're down 25 bucks, correct? I'm not talking about expiration. I'm talking about getting out of it before expiration. So you lost 25 bucks, right? Everybody agree? Everybody with me? If you had held it to expiration and it expired profitable, how much could you have made? 25 bucks. So what did we just establish? We just established a 1-to-1 risk-reward ratio. A way to make a 1-to-1 risk-reward ratio where I could potentially make around 25 and only risk 25 if I exit at the strike, if it comes down and hits me, right? But with our establishing that 1-to-1 risk-reward ratio, we found a way to have that ratio, but use higher probability binaries. Like a stop. Exactly, Jackie. You got it. Light bulb, Jackie? Makes sense now? You're kind of wondering, why is he going through all this? Why is he talking about this $50 thing over and over again, and this $10 probability, and this 75? Just get to it already. You get it now? So that is the concept of premium collection, where you have a trade set up on your chart, on your strategy or system, and you don't have a whole lot of time till expiration, and you just want to ride out time and give yourself some room. You want to utilize the high probability in the money binaries, but you don't want to risk 75 to make 25. That is a way you could take advantage of the high probability in the money binaries with the potential to make 25 and limit your risk to about 25, because we know that whether there's what, 5 minutes to expiration, an hour, or 3 days, when the current market is at the strike price, it'll be priced around 50 bucks and you can exit. Does that kind of bring it together there for you a little bit, guys? Like I said, this webinar wasn't going to be in-depth, crazy strategy system. It's getting your head around the idea of premium collection, how to take advantage of it, how it works, and how to manage it with a one-to-one type risk-reward ratio. Okay? And we'll talk some more in some future webinars about some different strategies and ways to, to utilize that a little more. Start playing with it. Utilize whatever strategy or system you're currently using. Test this in your demo trading account and see how it works for you. Okay? Put it to use, guys. All right, well, we are just about out of time. I appreciate everybody being here today and taking time out. I hope this was helpful. Like I said, practice this in demo, check it out. Hop on to nadex.com, get signed up for some of these upcoming webinars in the future, and we will see you again next week. All right, guys, thank you. I sure appreciate it. Thank you for your feedback and your questions. Have a great rest of your week, a great weekend,